Warren Buffett is known for both his immense wealth and his philanthropic activities. He is considered to be one of the greatest investors of all time and the personification of a self-made man. The chairman and CEO of Berkshire Hathaway became a billionaire in 1990, and he overcame Bill Gates to become the richest man in the world in 2008. Then, how did he get to be so wealthy? The following list of good financial habits from Warren Buffett can help you succeed on a level with him. Debt will put you under financial hardship. By living within your means, you can avoid debt and save money. Lessen your spending. Avoid debt. Do not use credit cards. Contrary to many Americans, Buffett made interest work for him rather than having to labor to pay it. Buffett asserted that he has seen more people fail as a result of alcohol and leverage, which is referred to as borrowed money, in a 1991 presentation at the University of Notre Dame. In this situation, leverage is unnecessary. If you're savvy, you can make a lot of money without taking out any loans. Buffett uses credit cards relatively little. He tells you to completely avoid them. Buffett once said, "Credit card interest rates are high. Sometimes they are 18%, sometimes they are 20%. If I took out a loan at 18% or 20% interest, I would go bankrupt." Avoid overspending on automobiles. Automobile costs, like those for homes, might significantly reduce your monthly take-home pay. New cars begin to depreciate the moment they are driven off the lot. Consider buying high-quality used cars to avoid losing a sizable percentage of the early depreciation. In my research, 44% of wealthy individuals purchased used cars, typically a 2 or 3-year-old vehicle that had just finished a lease. After that, these wealthy folks keep their cars for a very long time. You will have to pay for repairs as your automobile ages. These typically begin at about 125,000 miles. After this, the cost of repairs will be about $1,500 annually, which is still far less expensive than the cost of a loan or lease for a brand new car. Quality is a wise choice. Always choose to buy businesses. The third step is to buy firms. Owning a firm enables wealth preservation and expansion. Start making investments when you are young. Stock in the company is often purchased when buying a firm. If you possess stock, you are a member of the corporation. You should use the same criteria whether you decide to buy a stock or the entire company. Be sure you would buy the entire company before investing in shares. Invest in successful companies that you actually value. Buy more businesses with those proceeds. Invest in value. Determine a company's intrinsic value before buying it at a fair or discounted price. Look for companies that, irrespective of earnings per share, have higher returns on equity. Trustworthy earnings and a dependable track record. Consider strong 4- or 5-year advantages and significant profit margins rather than just annual success. Businesses are able to raise prices above the rate of inflation because two brands and consumer goods, as well as products that are resistant to recessions and depressions like food and barriers to outside competition. Put your attention on the promising long-term prognosis and expansion possibilities. Attempts to find ethical and effective leadership. In the 2008 Berkshire Hathaway shareholder letter, Buffett added the following crucial principle: price is what you pay. Value is what you get. You face the danger of financial loss when you spend money on goods you won't use frequently, or at a price that is higher than the value you receive. Instead, emulate Buffett's modest way of living by looking for ways to get more things for less money. Whether it's socks or stocks, I like to buy high-quality items when they're on sale, Buffett said. Pick reputable businesses. Choose businesses with wise and competent management. Management should be open and honest with shareholders. The management should fight the institutional urge or the tendency to imitate other corporate managements even when their decisions are stupid or dishonest. The fundamental characteristics of a corporation, however, matter more than its management. In a speech delivered in 2007 at the University of Florida, Buffett said, "Most action is habitual, and they say that the bindings of habit are too light to be felt until they are too heavy to be broken." Create excellent spending habits and put an end to the bad ones. Habits are formed by association. We learn habits from almost everyone in our surroundings, including our parents, teachers, family, friends, co-workers, neighbors, mentors, renowned individuals, coaches, etc. Regarding one's financial practices, this could be helpful or harmful. If you have poor money habits, it's conceivable that many of the people you connect with frequently also suffer with money management. Their irresponsible spending habits can affect you. For instance, a trip or a night out with friends could result in a surprise $300 charge. Think carefully about how your friends and the people you connect with often affect your spending and saving behaviors, such as coworkers and relatives, for example. Make long-term investments. Maintain a low turnover and concentrated portfolio. Always think carefully before buying stock to hang on to for a long time. The best investments are made in companies that have low capital requirements and produce things that customers will always want to buy. Postpone asset acquisition and disposal. In most cases, staying silent is preferable to taking action. Instead of continuing to place short-term wagers on a variety of chances, invest for the long run. Someone is currently sitting in the shade because a tree was planted decades ago, according to a quotation from Buffett. And that is true. The seeds of financial success that are planted and tended today will eventually grow fruit and offer shade. This shade may be the freedom from debt, a comfortable retirement, or the ability to cover your kids' college costs. This long-term outlook on money greatly affects Buffett's investment decisions. He recommended investors to invest with a multi-decade view in a letter to shareholders written in 2014. They should focus with a laser-like intensity on obtaining significant increases in purchasing power over their whole investing careers. He begged investors not to focus on times of financial or stock market volatility. Keep a safety margin. Investors that are ill-informed and unprepared pose a risk to their investments. Assure you have a safety margin for each of your assets. Your margin of safety when investing comes from getting more intrinsic value than you are paying for. Additionally, your margins of safety shield you from poor judgment, economic fluctuations, and unforeseen disasters. Concentrating on a small number of holdings can reduce investment risk greatly as well. Another crucial aspect of security is constant access to cash reserves. Buffett noted, "We usually keep at least $20 billion and frequently much more in cash equivalents," in the 2014 Berkshire Hathaway annual report. The desire to invest one's liquid assets may arise for both businesses and private persons. However, according to Buffett, cash is to a firm as air is to a person, rarely thought about when it is present, but the one thing on one's mind when it is absent. Only cash is accepted as payment when bills are due. Leave the house with it at all times. Increased knowledge of financial management. It ought to be a component of the money you spend on yourself. Warren Buffett spends a lot of time minimizing exposure and risk in his capacity as an investor. Furthermore, according to Forbes, Buffett reportedly said that risk comes from not knowing what you're doing. The more personal financial knowledge you possess, the more safe you'll feel as you lower risks. This Warren Buffett statement ought to encourage people to aggressively educate themselves about personal finance. Go to bed smarter than when you got up, advises Charlie Munger, a business associate of Warren Buffett's. Develop a helping attitude. When you can, give a portion of your wealth to charitable organizations and the development of society. You can always give your time and effort to deserving philanthropic foundations and organizations. In 2006, more than $37 billion, or 85% of Mr. Buffett's fortune, was contributed to address some of the most serious global concerns. In an interview with Forbes, Buffett purportedly said, "If you're in the luckiest 1% of mankind, you owe it to the rest of humanity to think about the other 99%. As a well-known 1%er himself, Buffett makes it a point to support his statements. Buffett and Bill Gates, the co-founder of Microsoft, established the Giving Pledge, an agreement by more than 100 billionaires to distribute their money. Even if you don't have $1 million, helping others can still make your life better.